Hello everyone, this is Todd with TradeLeverage.com. Today we're going to talk about risk management and how to use risk versus reward to help you decide whether you're going to enter a trade or not. We're going to take the pound dollar from this previous Thursday as an example. For more details on this particular trade, as far as its setup, execution, and results, just visit TradeLeverage.com. Okay, so we've got the pound dollar hourly chart up. We have a sell entry right after the low of this bar here. Risk versus reward, basic money management tool. Essentially, you want to have a risk versus reward ratio, okay, of at least 2 to 1, but preferably greater than 2 to 1. Meaning, your profit target is going to be at least 2 times as great as your potential for loss or your stop loss setting. So you've got to determine, okay, what is the target? And then, okay, where is my stop loss? For this particular trade, how this was taken, you have initially, our target was here at this first support. And stop loss setting was at resistance. So what do we have here? Let's take a look at the numbers. If we take this trade at this point, potentially 100 and let's say 17 pips or so. Potential loss from this point, and we move that out of the way. If we enter here, right in this area, you can see 1, 2, 3, 4 bars of consolidation. I'm going to take the high of this bar right in this area, so you're probably looking at 46 pips, which makes sense and is in line with our 2 to 1 ratio. Now, you don't typically want to guess at this. You don't want to see something that's not there. So what we're looking for is there a region of consolidation, whether it be resistance, support, that most likely is going to be a good spot for your stop loss. Now, I could have taken up here, but you can see that's not risk reward and not consolidation like these 4 bars here. So for that reason alone, that made sense. Now let's see what happened with this particular trade as it progressed, and we'll see where we went with it. Alright, now price did continue down before forming a nice little dipper and then gained some more strength down and then hit our profit target for roughly 117 pips or so. So, lesson being here is looking for this 2 to 1 ratio as a minimum to enter the trade. If you don't see it, it's just too much risk and you're going to get hurt in the long run. Move on to another trade. Now, in future videos, we're going to talk more in detail about this, how to go about setting up your targets using previous resistance and support lines and many other things to help you do trades that make sense and are within your risk. Until next time, happy trading. Take care.